Anytime.
Good to go? All right. Thank you, everybody. Looks like I got the second half of the presentations, and I'm sorry you have to listen to a little bit about insurance, but I was told that I needed to go today, so I'd be more than happy to do that. As mentioned, my name is Cody Marshall. I am the owner of Houghton Insurance Agency. I have these little handouts for you. Mainly it was for me, but I figured since I made it, I might as well give them to you as well to kind of go along. I apologize if anything is misspelled because I was kind of doing it as I was on the phone with companies. So if things are misspelled, I do apologize. The only ones I hope I didn't is my wife and my kids' names. Other than that, I think we're probably good. So we'll go ahead and start. A little bit about me. Born and raised in Red Bluff, California. Graduated high school at Red Bluff High in 2004. After graduation, went straight to Chico State, where I graduated in 2009 with a marketing degree and a minor in international business. As mentioned, I am married to my wonderful wife, Chelsea. We are celebrating 5 years in October. And I have one daughter who's 4 years old, Kinsey, and our little whippersnapper, Eli, who is 2 years old. So who keeps us busy and has been waking up at 2:30 in the morning the last 4 nights. So, for those of you who don't know, I do currently live in Chico. So I have my business here, but my wife and I and the kids live in Chico. So I do commute. I do 4 days a week. I work from home on Monday, and then I work the other 4 days, Tuesday through Friday at the office. But being a business owner, I'm always working, so I'm always taking calls after 5 and on weekends, on vacation, whenever it comes. Some of my hobbies, I really enjoy camping and hiking, going to concerts. I have actually a Iron Maiden concert coming up next month that I'm going to, so my wife is very excited to go to that one with me. So, really into hockey. Our family's a super big San Jose Sharks fan, so we're actually on the first game of the year, which we always do every year, which is really fun. Big baseball fan. House divided. My wife's a Giants fan. I'm an A's fan, so we're actually going to the game this weekend. We have some friends coming in from Australia, so they're in Walnut Creek, so we're going to go to the game and check that out. So, and then also craft beer. I just love checking out new breweries, seeing what's out there, what's to offer. I mean, obviously living in Chico with Sierra Nevada, you know, you kind of get a good taste of that. So, a little bit about my office. I started there in 2009, but I did purchase it from my grandfather in 2015. I can be classified as an agent broker, so I do represent multiple companies that I'm appointed with, as well as I can reach out to brokerages for companies as well. So it's a little bit different as, you know, like maybe a State Farm or Allstate where they can really only represent those companies. I can expand my market a little bit more. I offer all types of lines of insurance except for health, so that's why I love Robin, because I just forward all the stuff to her. I don't really want to deal with it, so it's awesome that she's in the group and I can just forward all that stuff over to her. Name change coming soon, so I'm actually in the process of changing the name of the office. I have submitted some stuff to the Department of Insurance. They've already cashed my check, but the names I sent in were not available, so now I have to go back to the drawing board and try them out. Unfortunately, with insurance, it's, you know, the whole statewide, so if somebody remotely has anything that I want to use and they feel that it's too close, they will not accept it. So, you know, I'm just trying to figure out what I want to do with that. Next slide are the companies I represent. So as I mentioned, I do represent multiple carriers. So we have some bigger ones that you might know, like Nationwide, Progressive, ASI, which is now part of Progressive. They kind of take care of the home market in California. So you can combine the two together. Foremost, American Modern and Aegis are ones that we use for manufactured mobile homes, also specialty dwellings like out in, you know, maybe the country or hard to place stuff. There's also some brokerages on there that I'm able to use for multiple lines, and then also, which I will get to later, the California Fair Plan, which hopefully you don't have to use, but in case you have to, I do have that on there. How I like to work, so when I come across an initial client at first, I always like to try to do a face-to-face. I know kind of being younger, it's a little bit different, but I really like that initial, like, sit down, get to know you, do the face-to-face contact. After that, it's your preference. If you want to email me with changes or communications, if you want to text, we can do that, and so forth. Education, I think, is a big aspect of insurance that I like to try to let my clients know about. They're purchasing something that a lot of people have no idea how it works, what they're buying. and all that type of stuff. So just letting them know if they have the right coverages, if they're purchasing the right thing. Hey, you're using that for business, so you should have a commercial auto and not just your personal if you're pulling trailers and equipment and going to different job sites and so forth. And then as I mentioned, availability, I'm free through email, text. You can call me, we can set up appointments, and we can even go have a beer if you want. We can go over some stuff. I'll never turn that down. So, lines of insurance that I handle at my office, as I mentioned, basically everything except for health. You have your personal lines insurance, so it's going to be your home and auto, but it also classifies things as motorcycle, boat, RV, vacant properties, if it's going to be vacant for a while because you're remodeling it. You definitely should have a vacant policy for that, because sometimes built into the language, there's stipulations where if it's vacant for more than 30 days, coverage can be severely limited if you don't have the proper coverage. Umbrella policies, you have a lot of assets, it's really, you should think about getting an umbrella policy. It's just an extra layer of protection on top of everything that you own that you have. Course of construction, somebody's building something, go to Jody, you get a loan for a house and you're building it from the ground up. I can do that for a course of construction loan on the house, usually for 8 years, about the time frame, and then they're done. Commercial insurance, you have your standard like business owner's policy, what they call a BOP. So it's going to be like, service, retail, and office, things like that, usually more storefronts, Main Street type stuff. General liability and inland marine for contractors and so forth, as well as commercial auto, and then commercial buildings, workers' comp, etc. So I figured today, I could go on 100 different topics for insurance, but I figured the thing that's actually kind of affecting my office and probably people in general is the home industry market. I think we've all seen and heard in stories about all the devastating wildfires that we've had lately, and what that's doing for insurance companies is making it extremely hard to place insurance, especially when people are out of town. So a lot of times when somebody has something that's out, it used to be protection class, how far are you from a hydrant, how far you are from the fire station. Well, they still do use that for the rating factors, but now they're also coming up with fire line scores. And they range anywhere from 0 all the way to, I think, like a 20. Most companies, if it's 3 or above, will not even want to entertain the idea, and unfortunately a lot of stuff out of city limits comes up to be 3 or above. So a lot of companies are declining new business risk when it comes to that stuff, as well as some people are getting non-renewal notices saying that their current insurance does not want to provide insurance for them anymore due to where they are. What you can do about it, I would say be cautious of switching, and I only say that because it might be a good rate for the year, but you never know if that company's going to turn around and then after 1 year send you a non-renewal notice. So it's usually, if you are out in some of those areas, you can check the prices, but if you're having a hard time finding it, then most likely you should stay until you get that letter from somebody. Did you want? I have an extra one if you want one.
No, I got one right there.
Oh, okay.
Thank you.
If you do have to find insurance, if you are out and about and it is hard, just definitely shop around. Like I said, I can provide probably around 7 to 8 different quotes from companies, so I have a pretty wide range, but it always is good to go get second opinions from other people if you need it. The California Fair Plan, that is always an option. It is really, really limited, kind of not the best coverage in the world, but as there is an attachment on the very back, a handout that kind of goes over what that stuff is, but there's also DIC policies that you can attach to it that actually make it like a traditional homeowner's policy. What does the future hold? That's a good question. I have no idea. I don't know if this is going to be a permanent thing. I don't know if we don't have wildfires for a couple of years, if maybe they'll finally decide, hey, let's take a chance and write these. I don't know if the state of California and the Fair Plan is going to have to find certain companies and maybe kind of insure them and say, hey, you write the risk. If something catastrophic happens, maybe we'll supplement something. I have no idea. So as I mentioned, the California Fair Plan, it's kind of a last resort insurance. Obviously, you want to check all the admitted companies that you can, but sometimes you do have to go with the California Fair Plan. I had to do one about a month and a half ago for a lady up in Grass Valley. She did non-renewed twice and she couldn't find anything. I finally had to write the Fair Plan with her. But what you do is you attach what they call a DIC policy. It's called a difference in conditions. So there's a handout on the back that actually comes from the California Fair Plan website. And it's a build your own policy, so it's not a packaged one like normal homeowners policies are. The problem is it really only covers 10 things. And as you can see, when it says the CFP policy with the check marks, that's basically what they cover. So they would cover fire, lightning, smoke, internal explosion, the extended coverage options, and vandalism and malicious mischief. That's it. That's all they cover. It's a named peril policy. So any type of water damage, so as you had mentioned earlier, somebody had that water damage and a pipe broke and they were out in the country and they just had a fair plan and they didn't have a DIC policy, there'd be absolutely zero coverage for that 2,000 square foot basement that flooded. Same thing kind of with the personal property, all optional stuff, but as you can see, there's no coverage for theft and falling objects, weight of ice, snow, or sleet. So up in Redding, back in, I think it was February or January when all that snow happened, and I mean, I had some pretty big losses of people that had from the weight of snow coming down. That's not going to be covered either. But when you package a DIC policy with it, the DIC policy basically picks up all the coverages that the fair plan doesn't. So even though you have two separate policies, they combine to make one. And then also the other policy will give you personal liability coverages, whatever you choose, because the fair plan doesn't provide liability coverage as well. So the fair plan is not obviously the route that you want to go unless you have to, but they have made better efforts to make it better with the DIC policies. And I have found that a lot of times the fair plan and the DIC policy becomes a lot less expensive than like a quote through a brokerage or something. But the market is really tough. I have 7 to 8 clients on my desk right now that are being non-renewed, so I'm trying to find them insurance. And it ranges anywhere from $4,000 all the way to $17,000 a year for home insurance. Yeah. So that's kind of the market that we're in right now. So I've actually had a couple people unfortunately have to pull out of loans buying a house because they couldn't find insurance on it. One yesterday and one about a month ago, just because they called multiple places in town. Another quick little fact is if you are out in the country, I would definitely do not let your policy cancel from non-payment. I've actually had a couple people that had some manufactured homes way out and they let it cancel and we notified them and they never came in, and what happened was they thought they could still come in and make the payment after, and the company no longer writes out there. And I couldn't find them anything and they couldn't find anything, so now they have a California Fair Plan policy with a manufactured home that does not write DIC policies for manufactured homes. So they have a policy that covers those 10 things, and that is it, because they did not pay their premium. So just, if you're gonna get it, let the company send it to you. Don't forget to make the payment or do anything like out of the norm. It does happen, so you're not alone if it does happen to you, but just be wary of it. So that's kind of my spiel. I figured I'd just go over that. So if anybody has questions, I'll be more than happy to try to answer them. Yes?
As a business owner, I've heard of employee dishonesty policies. Do you know anything about that?
Yeah, I don't do a lot of them and everything, but yeah, sometimes there are, actually a long time ago, I think my grandpa had to use it one time because, yeah, if you handle cash and stuff like that, sometimes the policies do have them built in for minimal coverages, but you can expand them. It does cover things as far as like maybe if you have a cash drawer and they're sneaking money out and you find it, or that type of stuff, that's what it would cover. So a lot of times if you have a business owner's policy, there could be built-in coverage in there. If it is, it's maybe minimal, like $50,000, but you could increase that type of stuff as well. But with employees, there's a lot of different policies. The dishonesty, there's the practices, so to cover you in case you fire them wrongfully, or they're not taking their breaks on time and you're overworking them. There is stuff like that as well too. So,
what about technology insurance? Like if you lose everything on your server, say.
Like for my office personally?
Or anybody's office.
Yeah, so there is cyber insurance that you can get, and that's kind of another thing. A lot of times with the business owner policy, like that I have, I can put cyber on there. So if like I'm hacked, if I lose a lot of data, that type of stuff, identity theft, there's a lot of that stuff that's built in. It is pretty complicated because there's so many different things that they can do, and it's not just, of course, they can't make it easy and make it one package. It's kind of like, oh, well, you can get this package that only covers this, or you can get this one that only covers that, or you can pay triple the amount and you can get it that covers both. So I think it's just what your office specifically does and how much you use and so forth like that.
Is there a range that insurance runs?
I don't know off the top of my head. Like I said, you can get them standalone, or you can usually package them with your policy as well. If you package them, that's going to be your best way to do it. So.
I think one of the most common. Go ahead.
With like fire insurance, are you seeing that? Is it kind of like how with Cal Fire they have their recommended like defensible space? Is that basically what insurance companies are looking for? Are they looking for more than that? Like if you level everything 100 feet from your house, are they like, oh yeah, now we're happy to insure you, or is it not really that?
It's really not even that.
It's more just like
they
they
literally
leave trees in the whole area.
Yeah, they usually, every spot has a different rating system. So I was working on a guy that was, trying to get a house, and it was a fire line score 7, and then he backed out, and then now he's on 1, and it's a fire line score 5. And it doesn't really matter if there's the defensible space and everything like that. They still just, it's unfortunate, but they kind of just look at a map and they say, well, you're in this fire line score. If I'm able to call underwriting on it, I'll call it, but they'll say, oh, well, we got some other maps that we look at. It's just not accessible.
Right.
Some of them won't even look at it. They'll just say, anything over 3, we don't touch. So that's kind of my rule of thumb now is I have a company that anything from a 2 to a 7 I can call on, but they never take it. So it's to the point where, okay, if it's a 2 or a 11, we're just not even going to call, and we'll just go from there. But yeah, Cal Fire does have their specifications that they like, 100 feet and distance in trees and stuff. But yeah, a lot of times, at least the companies I represent don't go off of that. It's more of they put the address in, it shows them this fire score. They look at the whole picture, usually within like a half a mile to a mile radius. Look at the density, and then that's what they base it off of. Unfortunately,
They're like, this looks like paradise.
Yeah.
Basically.
Yep.
So yeah, I have a lot of people that call up and they complain, oh, my insurance premiums went up. And insurance premiums, just as a percentage, an insurance company can't just increase those premiums without insurance through the insurance commissioner, right?
Yeah, insurance in California is actually pretty heavy regulated. Even for companies to send out like non-renewal notices and stuff like that, they still have to get that stuff approved with the Department of Insurance. So when you see rate increases on your insurance, that stuff has to be filed and it has to be approved by the Department of Insurance. And if they can't back it up with their numbers, the Department of Insurance can say, actually, you're going to lower your rates because you made more than you needed to. They want to try to keep it fair. Obviously every company is different depending on how many policies you have and how bad you get hit. But yeah, all that stuff is regulated. So if you want to make a rate increase, you have to file it. Probably takes 6 months to do it. Even when you want to do a decrease, it all has to be sent to the Department of Insurance and so forth. So it is regulated as far as that stuff goes to try to make it fair. So companies just don't sit there and jack them up. Even though you might see an increase every year, they are having to file that each year and so forth. So ways you try to lower that stuff is obviously you try to combine as much as you can together, try to get as many of the discounts you can, clean driving records, no claims, make sure if you got security systems, you're turning that stuff in, safe driving courses, that type of stuff. It's the best way to keep it down.
I think the bigger changes that I'm seeing are just due to cost of reconstruction is the main thing. So we've had 2 or 3 insurance increases personally, and they just keep kicking up the amount of the coverage is what it is.
Yeah, a lot of times on homes they have an inflation guard built in, so it can range anywhere from like 2 to 4%. So if you do see an increase, if you look at your dwelling replacement costs from the prior year to the new year, you'll probably see it goes up a little bit. So that obviously, the more you put on it, it's going to go up, but then there's probably a general rate increase as well. But replacement costs, yeah, it's a big thing that you should always try to keep up with and everything, especially with the recent fires. Cost of materials and labor, and I think with the Santa Rosa fires, they really had some issues with people that were really, really underinsured for some of those homes. And it's not saying that they weren't done incorrectly. It might have just been a while, or people make updates on houses. You have a 2,000 square foot house and you got another 500 square feet. That's a lot more value, and so that adds more cost to it. And if it's not done correctly, then that's where you can get in trouble. So.
the BNI meeting that I was at yesterday, actually, the education presentation was State Farm that was talking about it. And he advised that look at your insurance policy and whatever you're insured for as far as dwelling goes, divide that number by the square footage of your house.
Mhm.
And if it's not 200, you're probably underinsured. So take a look at that number.
Or close to it, yeah.
Yeah.
I mean, every area is a little different, and every house, you know,
Every
you can have
house,
a more
yeah.
customized house that might be a little bit
Yeah.
higher, you know, as opposed to, you know, just kind of a builder's grade and stuff. But yeah, I usually have a range when I look at a house, when I write a new one, I take the replacement cost divided by the square footage. And if, you know, on a standard, you know, nothing's fancy, you know, house, if I'm around like 170 to 180, then I'm probably in the good realm, because there's usually an extended replacement cost on that as well. But that's an awesome tool that I use all the time. That's like the first thing I do replacement cost. I'm like, let me see what the price per square footage. And if I'm at like 140, like no, I must have missed something. I did something, because even a standard house is probably going to be more than that per square foot. So that's definitely an easy way for, you know, consumers to check their own stuff too. Is just, yeah, take your replacement cost and divide it by the square footage and see what it comes in at. If you're, you know, 180 to 200, you're probably okay. If it's coming out like 120 to 160, you might want to maybe talk to your agent.
You might be able to actually replace your house with that.
Yeah.
There are a lot of
Yeah.
people I see come in that were working with non-local insurance companies that haven't talked to their insurance agent in a very long time, or not even agent, just the company.
Well, and areas are
It's
so
so
different. I mean,
uninsured.
up here, housing costs and prices are a complete 180 from the Bay Area. So down there, you know, you're paying a lot more for a house than what it actually would be to rebuild it, probably.
Yeah,
Where it's a little flipped here.
Flipped, right.
So
Absolutely. Okay. Fantastic. Cody, thank you very much.
awesome.